This computer. All right, cool. I'm recording. So now the reason why we would wanted to see pound yen go bullish because we wanted to see gold drop. Now, if you attended the session from yesterday, I said there's going to be a level of subs from this region. Okay, so if the market breaks out, the market needs to take a breather, meaning the market needs to rest. Okay, so the market can't just break out and then keep going up all the way. So it has to break out and then relax a bit because the market is way overextended. Okay, very, very vertical price action. Market kept going up for like the last 2-3 weeks. The market was going up one direction, barely breathing. Okay, so that's going to leave a lot of volume below the marketplace, right? So before the market could go even higher, the market needs to take a pause around this level and then drop down. So this was the reason why team called the sell on gold the early hours of yesterday. And this is why I said we're going to see some bearish price action on gold because it was way overextended. And if I actually wanted to take that sell, it would have been from this top, but I thought it was not worth it. So it was best just to wait for the false moves to catch the real move. Now, like I told you guys yesterday, we are bullish so far on the DXY. Okay, still bullish because USDX SMT divergent. DXY was making lower lows, lower highs, and then the same time period, Euro was making higher highs, higher lows, and then let's remove this. And in the same time frame, GU was making lower highs and then lower lows. So the DXY is making lower highs, lower lows. We don't want to see either GU or fiber make the same trend move, meaning we don't want to see fiber or GU make lower highs and then lower lows. So one place is making lower highs and lower lows, and the other is doing the opposite, then we're most likely going to see a change in trend from the DXY. So in this situation, we can expect the DXY to go up. Now, the DXY is not yet showing a lot of inclination to go up, but like we called from yesterday, yesterday's Webby, that today we wanted to see the market drop down to confirm that if we're going to be bullish this week, and we want to see the market drop down to a 4-hour support level, which you see me labeled here, 4-hour support, which the market did precisely. So I wanted to see DXY drop down, which meant bullish price action for EU, GU. So if it was actually trying to trade today, I would have bought GBP USD and Euro from London session because if you use cutting through candles, okay, and I don't think I've taught that yet on the bootcamp, but if you cut through candles on DXY, okay, yesterday I taught you guys about equalize and equals the bootcamp. So taught you people equalize, then equals. This was the reason why I wanted to see DXY drop down first to then create kind of like an head and shoulders pattern, left shoulder, head, right shoulder, to then come to the support level, okay, to make retail traders think this is going to be an head and shoulders pattern, then the market is just going to drop, right? Then the market will bounce off 4-hour support level and then rally. So this is what I wanted to see play out yesterday, which happened to perfection. And so I want to see the DXY get back to this level and then drop off. Now, the reason why I'm saying I want to see DXY get back to this level is because if you cut through candles prior to this move up, this is where there was some institutional selling. Okay, there was institutional selling prior to the move up before price came down. And it was confirmed by the equal lows below the marketplace. So if you want to see a bullish week, I taught you last week. If you want to see a bullish week, then from Sunday's price open, you want to see the market price drop from Sunday's price open going into Tuesday London session to Wednesday's London session to get your low of the week. Okay, the market is then going to rally for the rest of the week. Okay, so this is why I called to sell on DXY. But like I said, we don't want to trade the false move. We are looking for the real move. Now let's go to the real move. Okay, okay, the session is being recorded, right? I'm recording the session. Yeah. So Euro USD. Okay, I really did not send the chart out. But I said I was going to do, I promised you guys yesterday I was going to do a market breakdown. Okay. And rather than trying to send you guys charts or explain reasons why looking at certain things occurring in price, then you guys will then go back to your charts and then draw up exactly the same thing. So if I keep on doing this way, it's going to help a lot of you guys, get accustomed to the way you want to look at the marketplace in terms of institutional buying and selling. Okay, so going back to daily time frame, if you look back in price action, okay, you can see there's still kind of an unfulfilled range down here. Okay, there's still an unfulfilled range down there because there's a lot of market imbalance below that region that the market never got to. So this makes me think long term we would see euro drop all the way down to this level long term. Okay, but short term, okay, I still wanted to see bear prices on euro USD due to USDX SMT divergence, which should be confirmed by bullish prices on this open, which is what we got when this open. So we have a bullish price, market rallied up. Now the price is getting to a 4-hour order block. Okay, so you can pull this up there. There is a 4-hour order block. Okay, and I believe the market is going to get there. Now, what I feel the market is doing is the market is stalling. Okay, the market is showing a pause. Now, the market is showing a pause, which might cause a lot of people to start to take in sell positions from that level. Okay, so the market is taking a breather. Then people are thinking, okay, there's actually people who think that they could sell the market from this level. Okay, it's time to sell. What they're going to do is they'll take sell positions from somewhere around this level, okay, because they feel, okay, the market is dropping, let's just get into sell positions. Then you're going to keep your stop loss above what they feel is a swing high being formed, okay? And what the market will do is go into London tomorrow is range, spike up quickly, tag all the orders, and then drop down rapidly. That's what I feel is going to happen in the market. Now, you cannot 100% get what you expect in the marketplace, but this is what I feel is most likely to play out with sales. Okay, and I showed you guys also yesterday confirmation of bullish TXY prices via the 15% drop in open interest. Okay, so that confirms a kind of like in a medium term bullish price on the DXY, okay, which I want to see being supported by bearish prices on euro and the pound. So for euro, we're looking to sell around 1.1209. Now, if you're not sure you're going to be awake for tomorrow to get the sell to execute the sell trade market execution, then you could place pending sell limit orders around 1.12096. Okay, then your stop loss goes past ODI, which is 1.1235. So as usual, we always like to keep our stop losses below 30 pips. Okay, which is what you're getting here. So you're getting a risk reward of 4. Okay, 4 for the reward to 1 risk. So we're looking at a TP of 100 plus pips for euro. So if this plays out, it's going to be very perfect. Okay, and then what we're just going to do from Tuesday, if we get that breaking market structure tomorrow, Tuesday's London session, That would be my probable high of the week. And then Wednesday going to Thursday, what we're going to do is just keep on selling the marketplace to stack more orders in line with our positions from Tuesday. So that way we quickly compound our accounts using the same small risk, 3%, 1 to 3% risk per trade. Okay, so that's going to quickly compound your account because you know the market direction, you're just doing the same thing at a particular time of the day, selling a London session opens when you get that false move prior to London. Okay, so going into pound USD, the same setup I want to see play out. Euro, like I called out again yesterday when price was still around this level. I wanted to see bullish prices and for price today to reach for this low. Sorry, for that high. Okay, so there's a range. Now, one subtle clear that the reason why I want to see pound value today, if you look at what the market was doing, okay, now you all know we expected bearish prices. Bearish prices higher anticipated DXY. Gave you guys all the reasons why. Cut-through candles, looking at equal lows, loss of liquidity below marketplace and DXY, which is why we wanted to see bullish prices on the foreign currencies for Monday. Now, prior to London session, there was kind of like a range. Okay, so the market went up, went down, went up, went down. And going into London Open, so this quick 1, 2, 3 move out of the blue. Okay, now that is intentionally done to get people to sell. But I taught you all, I think about 3 days ago. Prior to London Open, you're gonna see quick moves. The quick move prior to London Open is the false move. That is the false move. Okay, so you don't want to fall for that move. So this quick move was to get all the people who were correct, who were buyers inside it, so it gets them out of the marketplace before the market then rallies. Okay, now we are looking for bearish week and we want to be sellers during this week. Now, the area we're looking to sell pound USD is the 4 hour, not really the 4 hour order block, but there is kind of a mitigation block around the level. Okay, so this last bear candle, let me use a red box like that. That last bearish candle for me is a mitigation block. Okay, so this was the last bearish candle the institutions bought into to buy the market up. And I do believe there's a level of stuff they were trying to reach for. Okay. All right, cool. So the institutions bought into this bear candle and then the market rallied up. Once the market breaks down to the downside, it also is breaking market structure, confirming that you're bearish in price and you're looking for the market to get back to your 4 hour order block. Now, the market does what we want to see it do tomorrow. The market starts to trade around this level. Then you start to look for a sell placements, your sell orders tomorrow. That is what you want to focus on. If the market starts to rally going into London. Okay, so the market should be somewhere around this level. I think around London. Then you could place that sell. Your first CP is going to be way back down, low equal lows. Okay, so your first CP is going to be Monday's low for about 129 pips. Okay, and your TP2 is going to be the 20-day EBITDA data range, which is about 267 pips. Yeah. So every 20-day EBITDA data range below around 1.29294. And if you're able to get a sell move from around this level, your first CP obviously is going to be your Monday's low. Like I said, in bearish weeks, you want to see price trade below Sunday's price open. Okay, so Sunday's price open is literally Monday's low. So you want to see price from Tuesday drop down below Monday's low first as your first CP for about 129 pips. Then your TP2 is going to be it's going to be the 20-day EBITDA data range for 279 pips. Like I said, ultimately, I'm looking at pound dropping even further into the 40-day EBITDA data range. So now, even stands for interbank price delivery algorithms. It's another complex topic on its own. I'm going to cover it sometime next week, I think, on the bootcamp series. So we're looking at about a 456 pip move, which I'm going to be swinging once price is able to effectively take out this low. So if should price get down to this low and take that out, then I will be holding my positions from around this level, holding until the market takes out the massive liquidity I feel resting below this range. So pound USD, we're looking for sells. Euro USD, we're looking for sells. Gold also, we're still looking for sells because I feel price is way overextended. Power three accumulation, manipulation, distribution, exactly. So how do you know when there is a false support or a real support? I don't understand that question, Joe. Really don't. So let's look at gold. If we want to see DXY rally up, now all what we called out on euro pound is we're assuming that we want to see the DXY pop up. Okay, once the DXY go up and take out equalize, that is going to confirm that we're bullish. But there's still a likelihood that DXY could drop down and take out equal low. So that is very possible. That could most likely happen. But what I'm trying to point out is depending on where the market is tomorrow, okay? Tomorrow's London Open is going to determine if the trades are valid or not. Okay, so just one thing to project what price is going to do. It's another thing to execute what you feel price is going to do. And timing is very important when you're looking at what price is doing. So going into London session, London skill zone or US skill zone, where is price at? That's the first question you need to ask yourself. So where is price, and does this support what I feel the market is going to do? Okay, so if the market is still hanging around any of this level going into London's open tomorrow, or the market has started to go up, that confirms that we could most likely see bullish prices on bearish prices on the EU, fiber, and then cable. Okay, but now if the DXY starts to drop down without showing signs of stopping, then that could mean that GBP USD could go up and then Euro USD could go up. So all these currencies all depend on the movement of the DXY. Okay, so it's very vital that you monitor the movement of the DXY first, because that moves all the other currencies in the marketplace. So EU bearish, GBP USD bearish, gold, looking at more bears, and let's go to the 15-minute charts. Let's see. Okay, let's see what goes down. So there is a swing low around this level. Swing low around this level. Okay. Now we're looking at gold sells because we feel gold is very overextended on the daily time frame, the 4-hour time frame. The price of gold has been moving up very steeply for like the last few weeks. Okay, so we want to see gold take a breather and then make at least a retracement because it just took out the last swing up. Okay, I want to see the price of gold pause, but gold is still on an uptrend. Okay, so what we're doing here is we're trading against institutional flow. Institutional flow is so far is bullish. By all appearances, institutional flow is bullish. Okay, but we feel now that price is so overextended that we want to see at least some correction back down to this level, and if we're looking for a correction, then it would be logical to so this level here is where we're going to look for gold to get to. So we want to see gold. I hope you guys are all taking notes of all the spreads I'm calling out, because I'm not sending out charts to the channel, whatever. Okay, so I'm analyzing. This is why I send out the link to everyone, so there's no excuses. So make sure you take note of all these currency pairs. You cannot go taking out this I, then getting to mitigation block or a 1 hour order block, and then dropping down to this level to take out prior swing low. So if I were to sell gold, this would be it. I think I need to see it. Surplus. Yeah. We also need to take into consideration equal eyes around this level. So for selling gold, we want to see gold. We want to put surplus above the 15-minute short-term high, which is here. So surplus goes just below about 41 pips and risk very little because we're trading against the trend. Okay, so you don't want to overexpose yourself on gold because the trend is not supporting what you're trading. So in this kind of scenarios, if you're used to using 3% risk per trade on normal trades, then in events like this where you're trading against institutional flow, you would want to reduce risk to like 1% or half of that, okay, 1.5% or something, okay. But the thing is, you don't want to go in with all your full leverage on trying to trade gold because you're trading against the trend, okay. So this is what I'm looking at gold doing. Taking out this short-term high, getting to this level, and then dropping for about 275 pips. Now, NZD USD, let's see what's going on. NZD USD so far still stalling. So I'm going to ignore this because the price is stalling around that level. AU, the same thing. Want to see price take out this high. I'm looking for a price take out this high. So I feel this down move is just sucking more sellers into the marketplace. So for people to sell into AU, then the market rallies up, takes them out of the marketplace. And then what would happen is the market would then start to drop. Okay, so this is what I'm looking at playing out on 80 years there. Market should come up, pop up, take out this eye, take out the second eye, get to this far order block, and then drop, seriously drop to all the way down to this level. So it can be a very good trade. Price gets to this level. Very, very good trade on AU. We're looking at TP1, 96 pips, and TP2, potentially more than 120 pips for TP2, 80 USD. So the trade so far tomorrow, EU, GBP, USD, gold, sells, pound yen, yeah, another good setup. Pound yen, so like I said yesterday, if we want to see gold drop, we want to see pound yen rally. So I feel there's a motivation block here because market came back to old highs. There was a big bearish candle, which we know that institutions bought into to make the market rally. So this is where I feel the market can get to 143.208. So if price starts to trade around this level at the London kill zone, then you best know you're going to sell that. So you need to sell that. Then your first CP should be Monday's low. Sunday's price open, Monday's low. This TP1, which is 228 pips. Okay, so your TP1 is literally 228 pips. Then your TP2 would be, so we're looking at the 40-day IBDA low, which is going to be about 372 pips. So if price is able to effectively take, I know price is definitely going to take out slow. So we're bearish on pound yen. Okay, tomorrow's London session, you're looking for an eye or some sorts of form inside this daily bearish order block, and then you're going to sell that market all the way down to the level. So if you're taking your first TP, make sure your TP1 around your TP1, take about 60 or 70% from your TP1, then you hold that trade until price gets to this level. Because if price is able to break down below this level, then very, very likely, highly probable price is going to get down to this level. Now, if you look below all these levels on the pound pairs, there's a lot of voids in price. Okay, there's a lot of voids in price. So it's very logical that we can see the market drop down to these levels. Okay, so pound yen sell. Now euro pound. Let's see. There's a lot of questions. Monday sell off and drop. Correct. Monday only. All right, cool. So euro pound, we actually called a sell from yesterday. We said we want to see the market sell, and I think I sent out the charts to the Bullcam group channel. Sorry, Bullcam channel. We said we want to see euro pound drop. Now, what we were anticipating on euro pound was for price to take out this high, get to this level, then drop. Now, when I woke up this morning, euro pound was around this level, and I said we should place pending sell limit orders around here, which unfortunately twice we missed our sell-off. Okay, I think we missed our sell-off by 2 pips. Yeah, so it was just 2 pips. It was very, very painful because I very much expected euro pound to drop down. So for those of you guys who maybe factored in spread or something, you were able to get sell-ins of some sorts, then you'll be up about 28 pips on euro pound. Like I said yesterday, want to see price take out this low. TP1 is going to be 100 pips. Okay, then want to see pound. I personally want to see pound drop off from Monday going to Tuesday, then around Wednesday rally from one of this blue horizontal lines. So one of this level I'm looking at pound, then popping back up to resume the new option that I feel it's about to embark upon. So for now, I'm still bearish on euro pound. If I'm looking to sell tomorrow, it's going. Sorry, if I'm looking to trade euro pound tomorrow, it's going to be. I'm going to be bearish on euro pound for tomorrow until I see a price take out this low and get to one of those levels. Then I will start to recalibrate what I want to see the price do. And AD CAD, very, very interesting. Very, very interesting. Let's see, questions. Thought euro, JP, and JP is just in opposite ways. Thought euro pound plus. I also didn't understand that question. Okay, so yeah, so what I did on AD CAD is obviously you can see AD CAD we're bullish. Okay, on AD CAD we're bullish, but now we have a massive range. This is a massive range, very, very, very massive range. Okay, the price broke out of that range and then drop off, and we know where price is going to reach for. So price is gunning for equal lows, and definitely price is going to get down to equal lows. But I still feel AD CAD is bullish. Okay, so just 2 things that could happen. Okay, 2 things that could happen. Either we get a turtle soup where price quickly spikes this level but never gets to the 4-hour order block. Okay, so there's a 4-hour order block around that level. Let me get to it. Okay, 4. Okay, so there's a 4-hour order block around this level. Yeah, around that level. If I want to see price reach for, if price reaches for that level, then we could look to, for breaking market structures confirm that we're bullish, then we could buy. Or we could get a quick turtle soup to this massive liquidity pool below this marketplace. Then price will quickly rally and reach for the 20-day EBITDA high. So also a 20-day EBITDA low here. The price definitely is going to smash through. So yeah, either price goes down and then quickly pulls back, and then starts to go up, haven't grabbed all the liquidity in the marketplace, or price would reach for the 4-hour order block to fulfill more market limit orders, and then shoot up to the moon, taking out old highs and most likely taking out um, daily highs from 24th of July last year. So that is what I see happening on 80 CAD. This is all I have. The DXY, EU, pound, gold, NU, AD, USD, pound yen, GBP, and then 80 CAD. What I'm looking to trade tomorrow. So this is all the setups I have. And if you have your own favorite pair, maybe utilizing some of the information I gave out here in this webinar, you could apply that to your own pair to study that and see what you like that pair to do. So this is all for now, guys. I'm going to end this session right now, and I will start the Zoom and send out a new link to the bootcamp channel to resume our bootcamp session. Okay, so thank you guys for being a part of this webinar, and I'll see you tomorrow when I do another market update.